Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined by Zacks' very own Nina Mishra to bring you two number one stocks in totally different areas, but they're areas that are being ignored by the rest of the market right now. So there might be some value in some of these names. I'm going to lead off with my pick first, and that's Newmont Mining. Yes, a gold miner. I don't remember the last time I even looked at the gold miners. It's been a long time. I would say about 15 years. That was the last time gold was really breaking out. But it's breaking out again. It's hitting new highs here in 2020, near $2,000 an ounce. And silver's been on quite a run too, as well as copper. And Newmont has all three of those. So they've really seen a big increase in both earnings and in cash flows and various other things. And so things are looking really good here for the gold miners all in general. Several of them are Zacks number ones, but Newmont in particular. So let's take a look at what those estimates are looking like and why it's so bullish. So let's take a look at the consensus estimates here. So you can see here on this line for 2020, Newmont is expected to make 266. That's a huge gain, more than double what they made last year, which was just $1.32. And that's indications of those record gold prices. But look at next year, 2021, expected to keep going with 476 for next year, as clearly the analysts expect gold prices to stay elevated. Now, they did average in the third quarter $1,913 an ounce. That was up $4.37 from a year ago. Copper was at $2.99, up 62 cents from a year ago, and silver was at $21.69, up $4.51. But this led to their great cash flow. They had $1.3 billion in free cash flow in the quarter, up from $365 million a year ago. So you can expect, like, what are they doing with all that cash, right? They now have $4.8 billion in consolidated cash on the balance sheet with $7.8 billion in liquidity. All their mines, by the way, are operational right now, even with COVID. They've really put a lot of safety procedures in place, and so those are all operational, but again, that depends on government restrictions and regulations. So we'll see going forward on that. But even with that, they still had this record third quarter, their best quarterly performance in their history. And Newmont, one of the largest miners, has been around a long time. So it's kind of like we're entering into a golden period here with some of the gold miners. And they're rewarding shareholders. They did raise the annualized dividend. They raised it 40 cents. They declared it to 40 cents. That's up 60% from just the second quarter. So annualized, that's $1.60 if they keep it at that rate, which so far they're expecting to. And that yields 2.7%, which is, they claim, among the highest in the gold sector. But a lot of the gold miners now are in the same situation and are raising those dividends, also doing share buybacks. So a lot of that money is going back to the shareholders. But let's take a look at what this earnings growth really looks like on an actual chart. So this is the price and consensus chart, and you can see here in 2020, the shares have really taken off, but so have those earnings. That's what we use the Zacks rank for, to find these companies that are really growing their earnings and where the analysts are super bullish, and that is the case here with Newmont. Now, I wanted to take a look at a much longer chart because, as I said, the last time I remember, maybe even owning Newmont was around 2005 when gold started to take off. That's when the gold ETF was issued. And you can see here on the 20-year chart that in 2005, it did get very bullish. It had that huge run from 2000 to 2005, but then it was just kind of moving sideways during the financial crisis. Got a bit of a boost there by 2010 as everybody thought QE would bring inflation, but then it didn't. So sold off again. And now here in 2020, we have another breakout, a 20-year breakout here. Can we see further rallying? As I said, it looks like we're entering into this maybe golden period for the gold miners that we might not have seen since, dare I say it, 1979, 1980, the last time when gold really was in a gold boom. So we'll be watching to see what happens with all these miners, but this is an interesting development in the gold miners. Now, Newmont is only trading at 24 times here, but again, looking on to next year's earnings makes it much cheaper. With a lot of the commodity stocks, they'll have a higher PE as that commodity price starts to rise and as their fundamentals start to change. So you can't really look completely at the PE for commodities plays, and such is the case with Newmont. I would consider all the miners to be pretty cheap here, given what's happening with this earnings growth. But Newmont in particular is one of the biggest, and it's got that nice dividend yield now, and it is, making the cash flow. So we could see even further raises in that dividend, possibly going forward into 2021. So if you're looking for a way to play the precious metals, Newmont should definitely be one on your list. Now I'm turning it over to Nina, where she's going to tell you a hot play in the housing sector that you might not be thinking about.
Thanks, Tracy. My top pick of the week is Whirlpool, ticker symbol WHR. It's a Zacks rank number one strong buy stock. And we all know Whirlpool. It is one of the leading global manufacturers of home appliances, things like kitchen mixers, refrigerators, washing machines, and their home appliances are sold all over the world. Their brands include Whirlpool and other well-known brands like KitchenAid, Maytag. Now, this company has obviously benefited from the stay at home trend because people stuck at home, they have been upgrading their homes, they have been buying a lot of home appliances, and people have also been buying a lot of new homes. The housing industry has been very hot because of the migration that we saw, and also because of record low interest rates and low housing inventory. Now, these stocks, the stay at home stocks, they were, they suffered a blow yesterday because of the Pfizer vaccine news. Pfizer vaccine is more than 90% effective in treating the coronavirus. So probably we will have a return to the normal world sometime mid of next year, or definitely by late next year. But I think Whirlpool will continue to benefit because many companies have already announced remote work and flexible work policies. So people are spending more time at their home, and housing will remain hot because of the record low mortgage rates and low inventory. And because we know that rates will continue to be low for quite some time. And if we get a stimulus deal, and the chances are high now because we have the election outcome. So hopefully the two parties will agree on a stimulus. Then that will put some more money in consumers' pockets, and that they are going to buy more, including those home appliances. So this company has also been preparing for this pandemic. They have been preparing to improve their liquidity situation and protect their margins by cutting costs and other measures. And in fact, that also benefited their recent results. They reported better than expected results, beating on both the top and bottom lines, and also raised their guidance for the year. Their results were also better than prior periods. Now, the company had faced some supply chain disruptions during the quarter due to the virus, and so that is why they have a higher than usual orders backlog. So that will help the company in the coming quarters as well. Now, let's go to the code page on Zacks.com to learn more about this stock. So as I mentioned, the company had reported excellent results. So that is why we have seen that estimates for the current year and next year and current quarter, next quarter, they have gone up significantly after those better than expected results. Now, as I mentioned, this is a Zacks rank number 1 stock, and style scores also look pretty good. B for value, A for growth, B for momentum, and combined score of A. The industry and sector ranks also look good. Industry rank in the top 24% and sector rank in the bottom 31%. Well, sector rank doesn't look that good, but industry rank is pretty good. And another reason why I like Whirlpool is because of its very juicy dividend yield. The dividend yield is almost 2.7% as of now. And this company has been consistently increasing the dividend for the last 8 years. And recently, they again increased their dividend. So a very consistent dividend payout and dividend increase. The stock is up about 25% this year, although it is, a stay-at-home beneficiary, but it has not surged 300, 400% like some of the stay-at-home stocks. So that is why it is trading at a reasonable forward PE of about 10.1%, and expected EPS growth rate also looks pretty good. So definitely worth a look. Thanks for watching. Make sure to subscribe to our videos so that you do not miss anything. And also make sure to check out zacks.com/promo for an interesting offer. And we will see you next week. I will email